Global markets begin the new day with a broadly constructive tone as investors continue to digest last week's softer U.S. labor market data while looking ahead to fresh signals from the Federal Reserve. U.S. equities started the week on a firm note, with the Dow Jones extending to another record high, and the Nasdaq leading gains as investors rotated back into AI and semiconductor names, reinforcing confidence that the technology-led rally remains intact. Treasury yields finished mixed, reflecting a market still balancing resilient U.S. growth against expectations that the Fed can afford to be patient, while volatility across major asset classes remains relatively subdued. Breaking down FX, the US dollar is mixed after beginning the week on a firmer footing. The yen remains the weakest of the major currencies as widening US Japan yield differentials continue to outweigh expectations for gradual Bank of Japan policy normalization, while sterling continues to benefit from relatively resilient UK fundamentals and easing political uncertainty. The euro remains range bound, supported by improving confidence around euro area growth, but capped by expectations the ECB is approaching the end of its tightening cycle. Meanwhile, the Australian dollar is finding support from stabilizing risk sentiment and stronger Chinese activity data, although investors remain cautious given softer domestic business confidence and uncertainty surrounding the global growth outlook. On the central bank front, attention is increasingly shifting toward the evolving communication strategy at the Federal Reserve. Governor Christopher Waller defended the value of forward guidance, arguing that clear communication can strengthen monetary policy transmission when used flexibly, while his comments highlighted a growing contrast with Chair Warsh's preference for providing less explicit guidance on the future path of rates. That divergence leaves Wednesday's FOMC minutes firmly in focus, with markets looking for clues on how the new leadership intends to reshape Fed communication and whether officials remain divided between inflation and employment risks. In commodities, oil prices remain relatively contained despite ongoing geopolitical uncertainty in the Middle East, suggesting markets continue to view supply risks as manageable for now. Gold is holding steady as lower front end treasury yields offset a generally resilient US dollar, while copper remains supported by improving global risk appetite and expectations that Chinese policy support will continue to underpin industrial demand. Looking ahead, today's calendar is relatively light but still capable of shaping market expectations. German industrial production will provide another important read on whether the euro area's manufacturing sector is beginning to stabilize after a prolonged downturn, while US ADP employment figures will be closely watched ahead of Thursday's official payrolls report for any fresh evidence on labor market momentum. Investors will also keep an eye on Fed speakers and positioning ahead of Wednesday's FOMC minutes, which increasingly looks like the week's key event risk for rates, the dollar, and broader risk sentiment. That's all for now.